All right, strategic to tactical. This is Friday night, 14th of September. I'm going to try to knock this real quick. This is the market review and market brief for the major market indices, S&P 500, NASDAQ, go over the Russell. Also go over the dollar index, as it is something that has been definitely something to take note of, the strength of the dollar. We'll talk about that real quick as well. So this is the S&P 500 daily, and as you can tell, we've kind of been in a sideways chop, and as of the last week, a little bit of a sideways to down chop. And again, this is a market that, depending on where you are or how you're looking at things, it's a glass half full or a glass half empty type of market. So I've sort of been leaning towards the glass half full, but Friday's sell-off kind of threw me for a little bit of a loop. After we broke the prior week's low and then actually kind of snapped back pretty good, I figured, okay, they couldn't do much with that, and maybe we kind of rally off of that, but then Friday just was just down, and we kind of closed near the week's low, and that definitely I think changed the composure of the market, at least short term. So we definitely closed below, I'm sorry, the prior breakout high, which again could be viewed somewhat a little bit of a at this point the bears may have some control here, and if the futures right now, basically showing that right now that we're down about 6 or 6.5 handles in the S&P futures. So that Friday weakness, I think, now is showing potentially into tomorrow's open. So the first line of support again is the prior week's low, which is Friday's low, which we're probably going to open either near or below, depending on how we trade the rest of the night and into tomorrow morning. But that would be your ultra short-term sort of potential support. Then we're down next level. If you're a moving average guy, is the 50-day in the cash is roughly 1972. And then we also have the 38.2% retracement in the Fibonacci between the low, the August low, to the September high. So these, it's sort of your next big levels are right in here, right around there. So again, we'll see if that happens tomorrow. It may happen on the open, and we'll see how the market reacts. One strategy to play is if we open down low, it could be one or two ways. Buy the down open and count to 10 seconds or 1 minute or depending on your time frame, and then see how the market is in that time. And if you're up money, then put a stop at the low of the day. If not, get out and go short. But the problem, though, I think, last week, if you were watching the trade short term, is the choppiness has just been out of control. So it can open lower, rally. So in some respects, you need to be able to find points. Like if we open below the low or tomorrow, first line of resistance will be Friday's low. Next line of resistance will be Friday's close. So if you were going to play that strategy short term, buy the dip, and then there's a bit of a rally, understand that we may only get so far. So it's one of those things to maybe take some off, or take your whole position off at some of these levels, and then see how things go at that point. There should at least be a pause, and you can always buy it if it keeps going higher. But the way the market's been trading, you got to take your profits, and you got to take them quick, because there hasn't been much follow through either way. And again, being a Fed week coming up, that I think will just add to the choppiness. At least until the Fed's out of the way. So and again, if you can play it the other way on the short side, right? So if we open down, and you play a breakdown, understand where the support levels potentially are, and it's one of those things to get, if you got it, take it, and then watch how the market reacts to those levels. So McClellan oscillator has been kind of showing this weakness as it keeps making lower lows, lower highs, even while the market's kind of been in a sideways chop, or almost at a point where it's somewhat overdone. I mean, not quite there yet, but getting there. Doesn't necessarily mean we will bounce right away. As you can tell, the last time the McClellan got down there was in late July. It took a couple days for the market to bottom until we actually saw the divergence in the McClellan before we saw the rally in the equities. So I'd like to almost see the same thing, and ideally I'd like to see this happen after the Fed's out of the way. So again, starting on it's almost like my week will start on Thursday. Not really into doing too much going into a Fed meeting. That's the S&P. Nasdaq is pretty much very similar, except the Nasdaq obviously has continued to be stronger. And we'll see how that goes, although there's definitely a nice little sell level here, a high level sell. This is a Nasdaq composite around 45.44 ish. That has acted as nice support here over the last 3 weeks. If it looks like we may take that out tomorrow, and then the next level of support would be this prior breakout high of around 44.85 ish. So 50 days all the way down here, even lower. So I mean, there's a lot of air in here, and even if we break and we have a pretty ugly day tomorrow, on a bigger time horizon perspective, we're still quite bullish here. The upper trend's still intact. So obviously, if you're a short-term player, I don't want to be long. 50 handles or whatever, and plus a down move. But if you're a strategic player, hey, it is what it is. The uptrend's still intact, strategically or longer term. So McClellan is definitely been lower, but obviously this shows that the relative strength in the technology. Here's the relative strength versus the S&P, a lot more green than red. So something to take note of. We'll see if that continues going forward. And something that I have been watching is this junk ETF, and it seems like it's been a little bit ahead of equities. And what was interesting here is as the equities kind of have been just sort of flatlining at this higher level, doing quite well. Junk's been getting beat up here. This bond complex is having a tough time, and basically this led the move lower. Led the equities by a day or two last time it broke down, and even the last time it rallied. So it's interesting that now this has had pretty good sell-off. Equities have held up, so we'll see now if the equities break again. This would be this thing was basically forecasting the break in equities, well in advance of the break in equities. But it looks like this may have a potential stabilization, so we'll see if we can get another bounce here, and if that happens, how equities react to that. Again, obviously the Fed meeting is going to be the 1,000-pound gorilla in a room this week, and have a pretty big influence on how interest rates and bonds do. So yeah, so again, I'm going to play it real tight to the vest this week, not really be doing too much going into the Fed. Be more interested to see how things develop after the Fed, and then play it from there. One thing I'm going to just quickly go over is the dollar index. Has had a pretty impressive rally over the last couple months here, and commodities have been getting crushed, which makes sense being denominated in dollars. And I think in some ways you can look at it at you know, that's going to be a bit of a headwind and for equities as well, being that they're denominated in dollars, you know, at least in the U.S. And a stronger dollar, it kind of does, you know, potentially make it tougher for equities as well. But we'll see. I think, you know, the market is anticipating the Fed to come out with some real, you know, tightening words or phrases, or I don't know. I mean, eventually the market, you know, they'll have to raise interest rates, especially if economic conditions warrant that. But I think even if the Fed does exactly what the market thinks it's going to do, oh, you know what, we're going to raise interest rates, and all right, that may be, but after a rally like we've had, and I'll go down to the daily here, and it really shows how strong the dollar has been. I mean, that's a pretty impressive. This is like you know, you know, some biotech stock chart here. You know, after a move like that in the dollar, it may be a sell the news event potentially. So we'll see how that, if that's something that happens, but it could be, and something to keep an eye out. You know, potentially play as a strategy. You know, to see, you know, basically after the Fed gets out of the way, and that may be the, you know, the really short-term top in the dollar. So again, I think, you know, obviously, you know, we've kind of led this recovery, so it kind of makes sense at some point here the dollar should get stronger, being that Europe's still in the doldrums, and potentially getting worse with this whole Russia situation, definitely being a dragging them even further lower. So again, just something I note going into this week to see how that's probably something I'll be talking about on the financial media even more going into this Fed week. So that's all I got, and like I said, I'm not going to be playing it too actively. At least I don't plan on it initially this week. I'll kind of just be watching it. I think tomorrow maybe there is a chance, you know, as the Fed meeting is a day or two away from, we may get some volatility. Obviously, I think right now we're going to get volatility because we are down a few points, to potentially do some shorter term positions. We'll see how that works out. Again, it could be, you know, buy the open, sell the resistance, or sell the open and buy the support. So we'll see. Anyway, thanks for watching.